In September 2024, the Federal Reserve lowered interest rates by 0.5% or 50 base points. And then again in October, the Federal Reserve cut interest rates again, this time by 0.25%. And then finally, by December 2024, the Federal Reserve again cut the interest rate, lowering interest rates by 0.25% or 25 base points for the third time in a row. And this is consistent with a historical pattern whereby central banks cut rates at times when there is economic weakness or there are concerns that the economy is very, very fragile. And so I mentioned in the last video as well that we were experiencing speculative bubbles, in sectors like quantum computing, in AI and in technology as well. And I mentioned how this kind of behavior, certainly a lot of the hype, certainly a lot of the euphoria that we've seen in particular with quantum computing at the moment, really echoes a lot of the behavior that we've experienced, for example, with the dot-com bubble. And, learning from historical patterns, as I mentioned earlier, you can always see that as things are going up, as there's a level of euphoria and excitement in the market, there's only one place that things can go, and after that, they only go down. Just a few days ago, there was a lot of hype around quantum computing. The market cap for Rigetti Computing was at 4 billion. Quantum computing was at around 2 billion. And D-Wave was at around 2.5 billion. And what we've experienced over the last few days, we've seen a lot of hype, we've seen a lot of euphoria, we've seen a lot of excitement with these stocks, and we've seen them come crashing down. And so the media were hyping up the gains made by quantum stocks, and I'm sure that probably triggered a lot of FOMO in a number of people who were kind of paying attention to the media, if you like. And you can see that a lot of the hype was triggered in part by the news around Google. And so this article by Sky News, where they state that Google unveils astonishing quantum computing chip called Willow. And you can see here with this article, it says, at the moment, quantum computing is still experimental, but in the research, it is expected to speed up everything from making medicines to nuclear fusion research. And so I think that there was a lot of excitement in the market around all of this. People really excited by these breakthroughs, how quantum computing could really accelerate the progress in a number of different industries. You can see right here from this article on the MIT website that it states that in some cases, quantum computing abilities can solve large-scale problems much faster than their classical counterparts can. Examples include stimulating the behavior of matter, analyzing compounds to create new drugs, optimizing factory floors or global supply chains, and identifying fraud and risk patterns in financial transactions much faster. And so with all of that news, there was a lot of kind of excitement with what quantum computers can do in a number of different business industries, whether that's pharmaceutical, whether that's financial, whether that's even kind of something like food or beverages, where, using quantum computers to kind of optimize or streamline processes in the manufacturing process. Now looking at IBM's quantum computing roadmap, which you can see right here, and under this section here where it says 2033 plus, it states, quantum computers running algorithms using thousands of logical qubits are expected to enable general applications in security, chemistry, machine learning, and optimization. And so as you can see from this IBM roadmap, IBM don't predict any kind of practical use cases up until 2033. But despite this, the prices for the likes of quantum computing, Rigetti Computing, D-Wave, and IonQ were in part based on this kind of future projection, if you like, but also that euphoria, the euphoria that I keep on referring to. And I think it's a question of a lot of people's emotions just getting carried away with them, a level of FOMO, seeing the prices skyrocket and expecting that they're going to continue to go up and up and up. But the strange thing with all of this is that, CNBC had already reported at the end of last year that quantum computers couldn't really solve any real-world problems just yet. But it was only until Nvidia's Jensen Huang said that it would take 15 to 30 years before we saw any kind of real-world use for quantum computers that we saw that these share prices plummeted. But irrespective of this recent crash, overall, there are a number of indicators that kind of highlight that the stock market is actually in a bubble. You could look at the price to earnings ratios, for example, for the likes of Tesla, for the likes of Palantir, for the likes of Nvidia, all of which seem very, very high. And it doesn't seem to be a great deal of value in a lot of the kind of major stocks at the moment right now. With the exception of certain stocks that I've documented on this channel that are typically more like small cap and micro cap stocks. And you can see right here that when the Fed cut rates, it makes borrowing less expensive. It therefore means that people have a lot more money available to them, and this money is put into the stock market and the prices go up, which is what we're seeing at the moment. And so you can see from this article from Forbes in November that it states Warren Buffett sold more Apple stock and is raising so much cash right now. And down here it states, Buffett says he's selling because he thinks stocks are trading above their intrinsic value. And you can see right here that Reuters reports that Berkshire Hathaway, Warren Buffett's holding company, are sitting on a cash pile of 325 billion. And so one of the things that's kind of incredibly difficult is timing the market, getting the best possible price. But what you have here is one of the best investors in the world selling a lot of his stock, warning the public, speaking in public and telling people that he's concerned that stocks are trading way above their intrinsic value. And yet at the same time, you can see people getting carried away and excited. But either way, the fundamentals are that Warren Buffett is sitting on mountains of cash right now. And I think that he's preparing himself ready to deploy that cash at the point when we hit, which is a cyclical thing. The market operates in cycles, another crash. And so a lot of the excitement, and in particular the narrative around AI at the moment, where this is supposed to be the next thing that's going to be the solution to all business problems. It's very similar to the kind of narrative that was at play during the dot-com bubble, when businesses were given the first opportunity to come online with e-commerce sites, and they were projecting and predicting all sorts of revenues coming into their companies simply because they had a greater reach to more consumers than ever before. And again, there was a lot of euphoria and a lot of excitement, which kind of provoked this bubble with inflated prices, which all came crashing down. And again, you can see right here, there are a number of examples where Yahoo's stock price more than doubles on the first day as a public company. And you have a number of kind of what are now unknown companies, the Globe.com, for example, that goes public and soars 606%. And again, like I've said before, a lot of excitement, a lot of euphoria driving up the price, compounded by the fact that we have rate cuts, the cost of borrowing is cheaper, a lot more people are coming into the stock market with that, if you like, quote unquote, surplus money that they do have available. But the major issue is that as the stock market keeps on going up and up and up and up and up, there's only one more place that it can go, and that's down. And it's at this time of bearishness that there will be a lot of opportunity to get into some of these stocks, I expect, and potentially an opportunity to ride the wave all the way back up to the top as well. And naturally, I'll keep you posted because the stock market is always changing. I will continue to kind of cross-examine or analyze certain companies that I find really interesting. And in the next video, I'm going to go into a lot more detail about a number of the indicators that I'm looking at that kind of concern me and are kind of almost like the red flags that I talk about that are warning that the stock market is overinflated at the moment. But look, thanks for watching, take care, and see you in the next one. All the best.